So for people that have followed us for several weeks, months, or even years, know that we really don't pitch investments or specific securities on this channel and in our community. However, here's an example of something that really should be at the forefront of your investment management to reduce risk and enhance return. Everyone knows how good the five largest Canadian banking franchises are in Canada. That'd be Royal Bank, CIBC, TD, Scotiabank, BMO, and you can even throw National Bank in there. And so what we've been able to create is a auto-callable security, which we've talked about in previous videos, which we'll link below that video to explain how auto-callables work. But in a nutshell, it's a 7-year investment that gets called away on an anniversary date when the aggregate return of the bank holdings that are inside that investment are positive by even $1. But the return is 20.25% per year. So if it's positive in the first year, you get a 20.25% return, even if it's positive by $1. If it's positive by $10 or 10%, you're still going to get 20.25. So obviously the downside is that the Canadian banks are up higher than 20.25% in the first 12 months. Not likely. Let's say for whatever reason they are not positive whatsoever in the first 12 months. We have to wait until the second year term. But instead of being 20.25, it now turns into that multiple, which is 40.5. And then again, the same multiple, adding another 20.25% every single year until you get to the 7-year aspect. And then there's also a maturity barrier so that if you're negative, for whatever reason, the banking industry can't provide a positive return in 7 years, which has never happened in the history of markets. But if it did, you still have protection of your capital. Those are what we call no-brainers in the industry. Yes, could the banks shoot the lights out and you would have a lower rate of return than what the market would suggest? But we're talking about 20.25% for some of the strongest and most secure franchises in Canada today. Completely no-brainer from our perspective when you want to consider the risk and return trade-offs.